Hello everyone, in this video we will be studying the chapter 4 of ACCA F3 Financial Accounting, recording basic transactions and balancing the ledgers. So before you watch this, you must watch the previous chapters. So if you haven't watched them yet, check the description below and I've linked the playlists. So in this chapter we will just be learning about how we in a way make entries in the ledger account. So how do we make entry in the ledger accounts? That we have already seen in the previous chapter. In this chapter we will be learning how to balance the ledgers and we'll see how you record them in the ledgers and how you balance it in the ledger. So even though most of the concepts in this chapter is already known to you, but we will still be doing this, and this is going to be a short video because you've done it. So these are the chapter learning objectives. Okay, so how do you update a ledger account? Whenever there are cash sales, then the cash transactions, cash purchases, such transactions will be involving cash. And what does credit sales mean? Credit means something wherein the payment has not been made or received yet, right? So this chapter develops the principles introduced in the previous chapter. The nature and recording of cash and credit transactions is also considered. Much of the content of this chapter is new, however, it is an important foundation for your ACCA studies, right? So the first thing which we'll be taking care of here is the recording of cash transactions. So what do you understand by cash transactions? Any of the transactions wherein cash is being involved, such transactions are known as cash transactions. Cash transactions are those where payment is made or received immediately when cash is exchanged at the point of sale or purchase. So there are two types of transactions. We know that one is the cash transaction and the other is the credit transaction. What do you understand by them? So the first thing, cash is done immediately, right? Cash means that something is being done immediately. And what do you understand by credit? So cash is also another word for immediately is prompt. So whenever there is a situation of prompt payment or prompt receiving something, so that is a cash payment. What do you understand by credit payment? This is on a later date. This is on a later date. Future. So this takes place in the future. So now you know the difference between cash and credit. So whenever a cash sale or cash purchase takes place, the payment is made within that moment, in the same moment, or the payment is made in a prompt basis. Sales and purchases made by check, however, are classified as cash transactions. So some of the payments are made through checks also. So checks are also known as cash transactions. Why? Because whenever you make a payment through bank or through check, that is also something in turn leading to cash, and that is also a prompt payment. So whenever something happens in the current moment, when the payment is made right now, be it through check, be it through cash, be it through bank, that is a cash payment. The main reason for this is that traditionally such transactions would be processed using a cash register or cash till. So what is a cash till? In olden days, there used to be something called as a cash till or a cash register. So whenever you used to get checks, they used to be encashed in the bank. Even though now everything is almost like e-banking takes place, this used to be a situation in the earlier days. So yeah. The checks and cash in the till were to be counted at the end of the day and then transferred into the bank account. Credit transactions, on the other hand, where goods are sold and purchased and paid for at a later date, are more commonly paid using electronic payment methods, i.e., they are paid online and are commonly referred to as bank transactions. So, okay, read this and whole paragraph once again, it will be clearer for you. Credit transactions, on the other hand, where goods are sold and purchased and paid for at a later date, are more commonly paid using electronic payment methods, that is, they are paid online and are commonly referred to as bank transactions. Right? So, whenever a credit transaction takes place, that is referred to as a bank payment only. That is a common assumption which we have to take in control. For the sake of simplicity, the following illustrations are there. So receipts of cash being made out of cash account rather than distinguishing between bank ledgers and cash ledgers. So that's what we've read in the earlier paragraph also, that when the payment takes place through check also, we will be considering that also to be a payment made from cash. Because if we start considering bank and cash separately, there will be two different ledgers, one for cash, one for bank. So in order to make it in a more simplified format, we will be considering cash and bank as the same entity. When cash is received, receipt of an asset, the entry in the cash ledger is a debit. When cash is paid out, which means a reduction in the asset, the entry is a credit. So this is something which we have learned in the previous video. Okay, so let's see the first illustration. Show the following transactions in the ledger accounts. The ledger accounts you need. Okay, so what was our first rule? The first rule is to identify the accounts, right? So let's see the first one and let's try to do it ourselves. Without seeing the solution, don't see the solution. Just try to be honest and do it yourself. Kamran pays rupees 80 for rent by check. So you have rent and you have check. So check is nothing but cash, right? So Kamran pays rent by check. So the money goes out. So cash is obviously credited. So the cash is credited. So what happens when the cash is credited? The rent gets debited. Why does the rent get debited? What is a rent? Rent is nothing but an expense. And what happens when an expense increases? It gets debited. So the rent gets debited. Okay. The second one, Kamran sells goods for $230 cash, which he banks. So he sells the goods for cash. Don't get confused with which he banks. Just read this. We have made an assumption that cash and bank are the same thing, right? So Kamran sells goods for $230. So it's nothing but cash to sales, right? Why? When he makes a sale, cash comes in. So when a cash comes in, what happens? Asset is increasing, which means cash gets debited and sales is being credited, because what is sales? Sales is goes out. You know that purchases get debited, so and you know that sales get credited, right? Now let's see the next one. Sales or sales revenue, you can write it, it's the same thing. It is an income. So when income increases, it gets credited. Okay, now let's see the third one. He then purchases $70 of goods for resale using cash. Okay, he purchases goods. So purchases goods, right? So it's an expense. Purchase is an expense. When expense increases, what happens? It gets debited. So okay, what do? And resale using cash, cash goes out. What does that mean? The asset is getting reduced, which means it is getting credited, right? So this is going to be debiting the purchases account and crediting the cash account. Hope that is clear. Now let's see the last one. Kamran sells more goods for cash, receiving 3,400. So when he sells something, what happens? Cash comes in, asset is increasing, so you debit the cash. You debit the cash and you credit the sales revenue. So that's it. I hope you're clear with this illustration. This is some basic stuff. Okay, so now what we discussed right now, these are the journal entries, the debit and credit. What we have discussed right now, these are the journal entries. Now we need to put them down in the form of a ledger, right? Let us put them down into a ledger account. So let's just make one. Okay, I'm erasing whatever I have written, because whatever I have written here is the same thing which is given in the solution. So now let's refer to the solution. It's exactly the same thing what we have discussed so far. Okay, now let's see this. First look into the question and see what all accounts we are supposed to make. So we need a rent account, you need a cash account, cash again, a sales account, purchases account. Okay, so these are the accounts which need to be made. Let's make a cash account first. Cash account, particulars amount. So just make this amount. This is a cash account. You know that this side is debit always, this side is credit always. And then we also have a rent account. Let's make it here. We also have a rent account. So rent account is also here. So amount. Okay, this is nothing but this is amount. You don't even need to write rupees over here. You can just write dollars because that's given in the question. But you can also write as amount, right? Amount is also okay, gonna work, right? So we have cash, we have rent, we have a purchases account, and we have a sales account. We also have a purchases account and a sales account, right? So we have a purchases account and a sales account. So what is this? This is a purchases account. Keep that in your mind. And let's also make a sales account, right? Sales account. Right. I hope you're writing it along with me so that you practice it by yourself as well. So this is amount and this is amount. And yeah, we missed writing debit and credit. So you know this side is always debit and this side is always credit. Same goes here. This side is always debit. This side is always credit. Same goes here. This side is the debit and here we have the credit side. And yeah, okay, now let's see each rental expense. So rental expense is getting debited and cash is getting credited for 80. Let's go to the rental account. So rent, how do you read it? Rent account debit, cash account credit. Easy. Let's go to the cash account. Where's our cash account? Cash account credit and rent account debit. Easy. So far, got it? Just as we have written in the journal entry, the same thing we need to put it down in the ledgers. So it was rent debit, cash credit. So here we have cash getting credited with rent, and in the rent account cash was here. Why? Because rent was getting debited, right? Moving on to the next solution. Cash is getting debited and sales revenue is getting credited. Okay, cash account debit of 230, right? So cash account is getting debited 230 with what exactly? With sales, right? Now sales account is getting credited with cash. Sales account here. Sales account is getting credited with cash, which is nothing but 230. Let's see the next question. Yeah. Purchases account gets debited by 70 and cash gets credited by 70. Purchases account gets debited by 70, right? With what? With cash. And cash gets credited by 70. Cash gets credited by 70. By what? By what are we putting 70 over here? By purchases, right? Next, what's the next thing? Purchases are getting debited in this. Okay, we have that. We've done this right now. Cash is getting debited by 3,400. Sales revenue is getting credited by 3,400. Cash is getting debited by 3,400, right, with sales, and sales is getting credited. Where is sales again? Sales is getting credited for 2,000. What was it? Oh, it was 3,400. Sorry, 3,400. Okay. So do you have any doubts in how we have put the balances? So these are the accounts. So these are the accounts which we have made. So I hope there's no doubt in this. We just wrote, so first we had a question and then we put the journal entries of the same, and as in how we have the journal entries, we put them down in the ledger accounts. It was that simple. We didn't do the balancing yet. We'll come to that in the later part of the chapter. So I hope you got this. Now let's move on. Let me just erase the answers. I hope you've written it. Even though there is the solution is there in the book, I want you all to do it by yourself. Right. Okay. After we finish this, what are we gonna do? So there's another test your understanding. Let's do that first. Yusuf enters into the following transactions in his first month of trading. Buys goods for cash. Okay, these are the transactions. What is the total entry to the credit side of the cash T account? So what do you understand by T account? T account is nothing but the ledger account. Hope that is also clear for you now. T account is nothing but the ledger account, right? So let's start doing this question. Let's first discuss the journal entries of the same, and then let's see. Buys goods for cash. Now I'm not going to explain the reason of why I'm writing a particular journal entry, because I'm assuming that you must be clear by now. Buys goods for cash. Goods purchases account gets debited. Debit purchases account, credit cash account. Purchases gets debited. Right. Now, pays $20 in sundry expenses. So you know what sundry expenses is. Sundry expenses is nothing but expense. So what happens when an expense increases? When an expense increases, right? So the second one is pays 20 in sundry expenses. Expenses account gets debited and we credit the cash account. Makes 1000 in sales. Debit your cash account and credit your sales revenue account. Receives a bank loan of $5,000. Debit your cash account and credit your liabilities account or bank loan account. The fifth one, pays 2,600 for fixtures and fittings. Okay, fixtures, and pays fixtures account or the expense account gets debited and the cash gets credited since it's reducing. T-shaped account is nothing but a ledger account. Now, the same thing, we need to put them down in ledgers. Read the question. We need the cash T account, which means we just need to make the ledger of the cash. So let's put the cash account, which is nothing but, this is the amount wherein we have dollars and dollars, and this side is debit, this side is credit, right? So in the first one, cash gets credited with purchases. Cash gets credited with purchases. For how much? For 380. You can go and read the question again if you have any doubts. Then we have in the second part, we have cash getting credited for with expenses 20. Cash getting credited with expenses 20. Expenses are nothing but expenses are 20. Cash is getting debited with sales 1000. Cash is getting debited with sales 1000. Cash is getting debited with sales. Then we have cash is getting debited with bank loan 5,000. Cash is getting debited with bank loan 5,000. Right? What happens after that? Pays. Okay, the last One is cash is getting credited with fixtures 2600. Cash is getting 2600 fixtures 2600. Okay, what's the question really? Don't go into the balancing right now, read the question. They need the total of the credit side. So, what is the total of 380 plus 20 plus 220 to what is the total of 380 plus 20 plus 2600? Tell me. It's obviously C, right? It is 3000, so the answer is 3000. I hope you know how to go about with these kind of questions. They were asking for the total on the credit side, so I just added these, right? Okay. So now let's move on to the next concept in this chapter. We've done the test understanding as well as the illustration. Recording credit transactions. So, credit sales and purchases are transactions where goods or services change hands immediately, but payment is not made or received until some time in the future. Money that a business is owed is accounted in the receivables ledger. Money that a business owes is accounted for in the payables ledger. So, receivables are obviously something, as the name says, which we are supposed to receive, which means somebody else owes this much money to us. And when we owe someone some money, when we have taken a loan from someone, when we have taken something on credit from someone, that is something we need to pay, which is payables. So that is something which has to be accounted in the payables ledger. Okay, here we are with another test your understanding. Let us do this now. Norris notes down the following transactions that happens in June. Record these transactions using the ledger account. So you need to record them using the ledger accounts. So let us first discuss each of them properly. Sell goods for cash for $60. So this is the first one. So we need to record these transactions in the ledger accounts. So what are ledger accounts? Ledger accounts are the T-shaped accounts which we have done. So now you know that you need to form the journal entry and then put it down in the ledgers, right? So let's first form the journal entries so it will be easier. I'm not going to explain the reason because now I'm assuming that you know it all. Sells good for cash. So cash gets debited and sales get credited. Pay insurance premium by check. Insurance premium gets paid by check. So check is nothing but bank or cash, right? So we will do this. Debit insurance and credit cash. I hope it's clear now. And credit cash. So let's just discuss them. The third one, what is the third one? Sell goods for $250. The customer will pay in a month. So what is third? Debit the receivables and credit the sales revenue, right? I hope that's clear. Fourth one, pay $50 petrol for the delivery van. $50 petrol for the delivery. Okay, so what should the answer be for this? Read it again and try to answer it by yourself. So cash is going out, right? Why? Because you are paying for the petrol, right? So it is an expense. So this is gonna be petrol expenses or delivery van expenses, whatever. Delivery van expenses account debit and credit your cash. I know the handwriting is not good, but I'm assuming that you're doing it by yourself and you're writing it down somewhere. Okay, now let's go to the fifth one. What is the fifth one? Buys $170 goods for resale on credit. So what is that? Purchases account debit, because we are buying some goods, and two, payables. So the fifth one is going to be debit the purchases, credit the payables. Why? Because you need to pay them. Now let's go to the sixth one. What is the sixth one? Buys $57 of goods for resales by paying by check. So sixth one is obviously debit the purchases, and you're paying by bank. So bank or cash, it's the same thing, right? Credit the cash or bank, whatever, because we are assuming cash and bank to be the same. What after sixth, seventh? Buy another $40 goods for resale paying cash. Okay, so here we could have written the same thing. Now this is the same thing again. Here we could have written cash or bank, whatever. So in the second question, the entry remains the same, only the number changes. In the sixth, there is 57, here we have 40. The last one, buy a new computer for business for 800 paying cash. Computer is an asset, right? Computer is an asset. So the computer is increasing. So computer account debit. Computer account gets debited and cash gets credited. So these are our journal entries. Now we need to put them down in the form of the ledgers. So now you know how to put them in the ledgers, but still we will just make the ledgers. So what is the first account which we are making? The first account which we are making, let's just start with the most important, and that is the cash account. So everything is in dollars, so let's keep an amount like this, and this is nothing but, you don't need to write the heading, and you know that this side is always the debit and this side is always the credit. And what other account do we have in the question after cash? Tell me. After cash we also have the sales account, right? If you can recall, we have the sales account, we also have the purchases account, dollar. This side is always the debit and this side is the credit. We also have the purchases account, if you can recall from the question, right? So let's make a purchases account too. Purchases account, particulars amount, you have amount here, and then we have a debit side and then we have a credit side. What else accounts are we missing? Tell me. So we made cash, sales and purchases. So you know that there are receivables and payables in the question. So let's make a receivables account. Receivables account. Right. Okay, so I made all the accounts. So we have a computer account, we have a motor account, insurance, receivables, purchases, sales and cash. The only account which is left is payables. So let's make a payables account as well. Payables. I hope you're writing it side by side in your notebooks. You can't do accounts orally, so I hope you're solving it by yourself as well. Right. So now let's go back to our journal entries, and now you know how you make a ledger account by using the journal entries. So now let's go and see. So let's first see the first one, sells goods for cash. So what are the two accounts here? We saw that it is cash and sales. So sales is getting credited and cash. So it is $60. So we have cash account debit to sales, right? So sales cash account is getting debited to sales at $60 and sales is getting credited to cash 60. So you know that cash or bank is the same thing, cash or bank to 60, right? Hopefully, I hope you're able to understand it till here. Now let's see the second, pay insurance premium by check. So what was our journal entry? Insurance gets debited and cash gets credited, right? So with what? 400. So let's go back to the cash. and cash account gets credited with insurance. And how much was our insurance? It was 400. So now you know that insurance is getting credited. So let's go to the insurance account and write insurance is getting debited, cash is getting credited, insurance is getting debited, right? So let's go and write cash or bank. Preferably make sure you write bank, because end of the day everything takes place through bank. And the amount is 400. Hope it's clear. Now let's see the next one. Sells goods for 250, the customer will pay in a month. So what was our journal entry? The journal entry was receivables to sales. So receivables accounts debit to sales, right? Receivables account debit to sales. So how much was the amount? It was $250. And now we have to credit the sales account. Sales account credit to what? We're not getting the cash, here we're getting receivables. So we'll write receivables, and how much was the amount in the question? 250. So it is 250. Now let's move on to the next one. Pay $50 petrol for the delivery van. So delivery van is nothing but motor expenses, right? So let's see, $50 are paid to the delivery van. So in our solution we had written delivery account debit to cash, right? So delivery is nothing but it comes under motor expenses. So motor expenses gets debited and the cash is going out, since the cash or bank is going out by 50, right? So if cash is going out, it's getting credited. So here we'll be writing motor expenses, and what was the amount? It is 50. And the opposite entry, the double entry, takes place in motor expenses. And here what will be the answer? In motor expenses we are paying off by bank or whatever by 50, right? Now let's go to the next question. Buy $170 goods for resale on credit. So you are buying something on credit. So this is purchases to credit payables. So purchases account debit to payables, right? So how much are we debiting purchases for? 170. That's what was in the question. So 170, and we have taken it on credit. So payables also we credited to payables, right? So what happens in payables? Purchases, payables is getting credited and purchases is getting debited. Okay. Now next part. Buys $57 of goods for resale, paying by check. So here the entry is not done by credit, it is done by what? It is not done on credit, it is done by using the bank or by paying the check, right? So, and how much is the amount? It is 57. So I don't think there's anything to explain. This is something which we've been doing. So let's go to cash account, and in cash account we will be writing purchases 57, and it goes out from the bank, right? And where's the purchase account? It's here. Cash or bank, whatever suits you. It is 57. So when you're paying by check, you can preferably be writing cash, right? Anyway, what is after this? Buys another $40 goods for resale, paying cash. So you're paying for resale by cash. So once again, let's go to the purchases account, and we have to write cash or bank, the same thing, and the amount is 40. Now we go to the cash account, and we have purchases again, and this time what's the amount? It's 40, right? So it is 40. Now let's see the last entry. Buy a new computer for the business for $800, paying cash. So computer gets debited and cash goes out, right? Computer gets debited with bank or cash for how much? 800, and the cash goes out, right? So this is an asset. Computer is an asset. And since the cash is going out with computer is a non current asset. You know that it's a non current asset. How much is the computer? It is 800. So that's it. We're done with the ledger for this account. And keep this in your mind that we are not balancing the ledgers right now. For now, let's just see this. And then in the following questions, we will be doing the balancing. So you can pause the videos and take the screenshots of all the accounts. This is our cash account. This is our sales account. This is our purchases account, and this is our receivables account. This is our insurance account. So insurance is an expense. And then we have our motor expenses account. So the delivery charges and everything comes under this. And then we have computer, which is a non-current asset. So that's it with this question. Now let's move on with our chapter. Okay, so we have another test your understanding. Now let's see the test your understanding. So for each of the following individual transactions, state the two ledger accounts affected and whether the ledger account should be debited or credited. So in this question, what you have to do is basically give the journal entries, which account is getting debited and which account is getting credited. So now let's revise. So now by now this must be very clear to you all, but still let's do it. Ole purchases goods for 5,000 and pays by check. Ole purchases goods for 5,000 and pays by check. So cash goes out. Purchases account debit. And what is credit? Cash account. Now, the second question, Ole makes a sale to a customer for $500. The customer pays in 30 days time. So what is this? Receivables. This is selling something on credit, right? So receivables account debit and credit sales. So debit is receivables and credit is sales. Now, Ole pays a telephone bill amounting to 40 and pays by check. So whenever in the question something is getting paid by using check, you can write it as a debit entry of cash only, right? Ole pays because when you take the check to the bank, it gets encashed only, right? So whenever there is a when check is mentioned in the question, you will assume it to be payment by cash. Ole pays a telephone bill amounting to $40 and pays by check. So telephone expenses gets debited and cash gets credited, right? So this is nothing but telephone expenses. This is the short form. Telephone expenses gets debited and cash gets credited. Okay. Ole receives bank interest income of $150. So interest income gets credited, right? Why? Because it's an income. All incomes and gains are credited. Remember the logic. Whenever incomes or profits or gains increase, they get credited. So what is the question again? So you are getting money, and so money is increasing. So an asset is increasing. So this is nothing but cash or bank. So I'm assuming it to be cash account debited, and credit is nothing but income. Credit is interest income. Why did I write interest income? Because that's what is given in the question. Ole purchases stationery for $12 and pays cash. Stationery account debit and cash gets credited. So this is an expense, let's assume. So debit stationery expenses and credit what? Credit cash. Ole makes a sale to a customer for $400. The customer pays cash. So sixth one is nothing but we are debiting the cash account and we are crediting the sales account. I know that my handwriting is not good using this pen, but it's okay even if the handwriting is shabby, because I'm assuming you have a notebook in front of you and you are writing down all these answers, the concept which I'm discussing, and that is everything correct. So that's something which you need to learn, right? Rather than focusing on the handwriting. And even though my handwriting is bad, you just have to make sure that you're writing down the answers as in when I'm discussing them. Okay. So now I'm assuming that we all are through with the journal entries and how to, post the journal entries into ledgers. Now let's see what is there in the further chapter. Once the now, okay, so this is the important part of this chapter, and this is nothing but balancing of a ledger account. So how do you balance a ledger? So once the transactions for a period of time have been recorded, it will be necessary to fill the balance on the ledger account. Now we have to total both sides of the T account and find the larger total. Put the larger total in the total box on the debit and credit side. Insert a balancing figure to the side of the T account. Okay, now let me first, don't get worried, I'll first explain to you. So let us assume that this is our journal. Let's take cash account, right? Let's just assume that this is a cash account. Now I'll tell you how balancing works. Even though most of you know this, I'm still explaining it. So let's say we have cash account debit to sales. So sales 100, okay, and purchases comes here, right? So let's say the purchases is just 20. Now, first thing what you need to do is you need to see, is the debit side more or credit side more? Which one is more? Is the debit side more or credit side more? Obviously the debit side is more because 100 is greater than 20. So whichever is more, write that in the total box. So we have a total box here which is 100. We have a total box here which is 100. Now we need to make sure that both the sides, the debit as well as the credit side, have the same totaling. So the debit side we have sales 100. So purchases are 20. So we need to, which side we need to balance? Isn't that obvious? We need to balance the credit side so that it becomes equal to that of the debit side. So now let's put the balancing here. Balance. Now I'll tell you what balance CF and balance BF is. We will go to that. First, understand how to do the balancing. So it is nothing but 80. Now what happens? 100, 100, 100, 20 plus 80. Now the entire account is getting balanced. Is that understandable? Now, in the same question, if let us assume that this is 20 and purchases is 100, now what will you do? This is our totaling, this is our totaling. Which side totaling is more? This time the credit side total is more, so the total comes down here, total comes down here. Now instead of doing the balance side here, we will do the balancing here, which will be nothing but 80. So this is how it works. So this is how you do balancing of any account. Now let's read the theory. Now you'll be able to understand. Total both sides of the T account and find the larger total. Put the larger total in the total box on the debit and credit side. Insert a balancing figure to the side of the T account which does not currently add up to the amount in the total box. Call this balancing figure balance CF or balance CD. So CF is carried forward, CD is carried down. Carry the balance down diagonally and call it balance BF, brought forward, or balance BD, which is brought down. Now let's see what brought forward and brought down really is. Okay, so let me explain that also. So there are types of balances, which is nothing but balance forward and balance brought down. So there are balance, just a second. So we have balance BF, balance BD, balance CF, and balance CD. So these are the various types of balances which we have. So whenever you have a ledger like we have just done, like which we have seen, if the balancing is here, it is called as balance what? We'll think about it and let me know. What do you think it will be whenever there is a balance here? Yes. So this one is always CF. Whatever the, just a second. You'll understand this better when we do a question, but let's take an example. Yeah. So if I have to balance this, I'm gonna write balance CF, and that will be 170. So then the total gets matched. After that, I need to bring the balance diagonally to this side and write balance brought forward, which is nothing but this 170. So why are we doing this? Because once you close the ledger, this is of the next period. You need to continue and you need to bring forward the balance which we had in the end of the previous period. That is why we do this. Now when we do the questions, this will get more clearer to you. So don't worry about that. Let's move on. Okay, so now we have an illustration. Let's take a look at the illustration. So this is what is a cash account and we need to balance it. So how do you balance it? Right. So we have cash. This is the question and this is the cash account. This is the debit account and this is the credit side. You know the logic now. After the logic, you need to take a look at this. So this is the debit side and the credit side, and these are the journal entries. So this side, the total, and you need to do this total of this side. So here you get 10,250, and whatever the balance is, you have to write balance CF carried forward, which means you have to carry it forward to the next period. This is the balancing, and once you're done, you diagonally bring it here and you write it as balance brought forward. So nothing, it's not any rocket science or something very difficult. All you have to do is do the balancing, and the name of the balancing will be balance CF because you carried it forward, and that is nothing but balance CF, and you brought it forward, then you write balance BF. This is for the new period. So that's it. Easy, quick revision, very quick revision. So you have an account, and if you have to balance this side, you write as balance CF carried forward and the amount, and you do the totaling here. After doing the totaling, you bring it diagonally here to balance brought forward, and vice versa. If the balancing was this side, this would have been balance CF, and then you, after the totaling and stuff, you bring it down here to balance brought forward. Easy, nothing difficult in this. I hope you're able to understand what I'm saying. Okay, now we are done with the illustration as well. Let's see the test of understanding for balance of the following account. Okay, we'll do it. So we need to balance this account. So start making a ledger for the same and start with the balancing, and I'll also make it, and then you can check it with mine. It's very easy. So let's start. So we have a cash account only again. So cash account, let me just see how much of the chapter is left. Just a second. Okay, we're left with very less. So this is the credit side, and this is the debit side and the credit side. So this is our ledger, this is our dollars. Right, now what you need to do in the question, as it is, you are writing it down. So this is the cash, this is the capital, sorry, not cash, capital, How much is that? 10,000 given in the question. I'm just putting it straight as it is. Sales is also given in the question. Putting it as it is, 300. Purchases, putting it as it is, 1,000. Rent, putting it as it is, 2,500. Electricity, putting it as it is, 750. New van, putting it as it is, 15,000. Now we have to total both of them. Which side is more? Isn't it obvious that the credit side is more? The credit side is more. So let's total this. How much is this? 1,000 plus 2,500 plus 750 plus 15,000. So the total is 19,250. So I'm just totaling it down here. Okay, let me just extend and do it in the question itself. Right. I hope you're doing it by yourself. This is very easy. Right. So now you have this. This is our account. So which total is more? The credit side total is more, right? So what is the total here? The total is nothing but 49, sorry, it is 19,250, right? 1,000 yeah. So it is 19,250, which is 19,250. So this is the greater total, so we're putting it down on both the sides. Now here we need to do the balancing. So 19,250 minus 10,300 will be nothing but 8,950. So what will we write here? Tell me. We are going to carry it forward. So this is your balance carried forward. Now we're done with the totaling. So we have to take it diagonally here, right? So this is nothing but balance which is brought forward from before, which was we are saying that we will carry it forward, and here we have brought forward. We will just put the same thing here, which is 8,950. That's it. We're done. Easy. Any confusion here? If you have any confusion, you can drop it down in the comment section, but I am assuming that you're done with this because it's that easy. So here, whenever you balance, you are writing carried forward, and whenever you bring it forward, you write BF. Okay, moving on. We are done with test understanding too. Okay, now we have how we close off the ledger accounts. So how do you close off the ledger accounts? At the year end, the ledger accounts must be closed off in the preparation for recording of the transactions in the next accounting period. Okay, so statement of financial position ledger accounts. Assets or liabilities at the end of a period is equal to assets or liabilities at the start of the next period. So during the end of this year, how much stock or how much ever things I have left with me, that will be the opening balance of the new year. Is there any confusion in that? See, how much ever is my closing balance of this year, that will be my opening balance of the next year. Any confusion in that? Closing, write this down. Closing balance of this year will be equal to the opening balance of the next year. Right? Any confusion in that? Okay. So balancing the account will result in a balance CF being the asset or liability at the end of the accounting period, a balance BF being the asset liability at the start of the next accounting period. So this is something which we have discussed, what carried forward and brought forward is, right? I don't think we need to discuss it again. So now let's see what profit or loss ledger accounts are. At the end of the period of at the end of a period, any amounts related to the period are transferred out of the income and expenditure account into another ledger account called as profit or loss account. This is done by closing the account. Do not show a balance CF or balance BF, but instead put the balancing figure on the smallest side and label it profit or loss. Okay, So now there is another ledger account which comes into place, and that is known as a profit and loss account. So this also looks just like a ledger account, but whatever balance we have, so when we are doing the balancing, we write it as balance carried forward or balance CF, right? But in this, we whatever incomes and expenses we have taken, that will all be put in the P&L account, which is the profit and loss ledger account, and whatever balance we do, that balancing figure will give our P&L, profit and loss. So you'll understand it better when we do the test your understanding 5. Okay, read the question. I'm giving you 2 minutes. We'll do it quickly. It's very easy. Right. So Johnny had receivables of $4,500 at the start of 2000 X5. During the year to 31st December 2000 he makes credit sales of $45,000 and receives cash of 46,500 from credit customers. Okay. So, what is the balance on the receivables account at the end of the 31st December? So, what you need to really do is make a receivables account. So, let's make a receivables account. I'm not going to write the full forms because we've done similar questions. I'm just going to write the short form. So, hope you understand, but I'll discuss it fully. So, Johnny had receivables of $4,500 in the starting. So he had this much at the starting, right? So 4,500 he was having during the starting, which is nothing but balance brought forward. Okay. And what after that? During the year he makes credit sales. So what is the journal entry of credit sales? Receivables account debit to sales. So it's gonna be sales. How much? 45,000 and receives cash of this much. So cash to receivables, right? So cash is gonna be 46,500. So this is that. Now we need to put the balancing, do the balancing. We've discussed it. So it's gonna be 49,500. And here also it's going to be 49,500. So how much will be the balance carried forward? It's going to be 3,000. Okay. Then what happens is that our balance brought forward again is going to be 3,000. So it's going to be 3,000. So what is the balance? Is it debit or is it credit? It is debit. Why is it debit? Because the balance is carried forward this side, brought forward. So we have a debit balance, which is C. Understood? Did you understand the logic behind it? So receivables, what are receivables? Tell me. Receivables are assets. Receivables are assets. And what balance does an asset have? We discussed it. So it is a debit balance. That is why our balance is on the debit side. If this was something else, the balance would be on the credit side. So you need to keep in mind what are the balances of assets. So debit side, so we started off with debit side. So now how do you end the question? You have started with the BF, you end it with the BF. So you take the balance CF to the other side, and this side will be our balance, which is nothing but debit. So the answer is C, 3,000 debit. Okay. So this is our test your understanding 6. So now we are doing the last test your understanding. So these are some transactions. Matthew set up a company, and in the first 9 days of trading of the following transactions occurred. So we need to basically just put them down in the ledger accounts. So I made all the ledger accounts for all of the accounts which are given in the question. So let's get started with the question. So the first one, Matthew subscribes for $10,000 of share capital in the newly formed company, paying by cash. So what did I tell you? That share capital, so he subscribes for it, so he buys a share. So when Matthew buys a share, it is an asset for him, right? And it is his share in the, and he pays cash for it. So the cash goes out because you're paying for the share, and as you are acquiring a share, that means that your asset increases, right? So let's just do that. Okay, sorry, my mic was not working. So it is cash. Sorry, this is cash account debit to share capital, right? So what is it here? It is nothing but $10,000. That's what is given in the question, right? Now let's go to share capital and write cash, which is nothing but $10,000. So that's the first question. Matthew buys supplies worth 4,000 and pays by check. Pays by check, right? So this is purchases to cash. So we have purchases of 4,000 and we have cash. Sorry, we have purchases, which is nothing but cash and 4,000. Okay, let's go to the next part. Matthew buys a delivery van for 2,000 and pays by check. Delivery van and pays by check. Delivery van how much is the delivery van for? It's 2,000, and we go to the delivery account and we make the same entry, double entry, 2,000, right? Okay, next. Matthew buys 1,000 of purchases on credit. So purchases to payables. Purchases to payables, right? So how much is purchases? If you can see, it's 1,000. And let's go to the payables account. Purchases 1,000. Okay, now that's over. The next part of the question is Matthew sells goods for $1,500 and receives a check of that amount. Cash to sales. Cash account debit to sales, right? That's how it is. So it is 1,500, and let's go to the cash account. Where is the cash account? Yeah, and here we have sales. And how much is sales? 1,500, right? The next entry. Matthew sells all his remaining goods for 5,000 on credit. All his good for 5,000 on credit. So sales. So this is credit. So what is credit? Receivables, right? So how much are our receivables? 5,000 given in the question. And let's go to our receivables account, and we have sales. And how much is our sales? 5,000 again. Okay, right. The next part. Matthew pays 800 to his supplier by check. Matthew pays 800 to his supplier by check. So he pays by check. So this is obviously payables account debit to cash, right, which is 800. And let's go to our payables account. Where is our payables account? Okay, and in our payables account, what are we supposed to do? Yes, we are gonna write this. I hope you can recall that this is the debit side and this is the credit side. Now let's see if we're left with any entries. The last one, Matthew pays rent of 200 by check. Okay, so rent is being paid. So what is the journal entry? Rent debit account, debit the rent to cash. Cash is getting credited because it is going out. So this is gonna be cash, which is 200. And when you go to the cash account, you are going to put rent over here, which will be nothing but 200. Now what is left? Now you have to do the balances. So one thing you need to keep in your mind whenever you're doing this is balancing for, okay, let me just write it down here. Balancing for purchases and sales and rent. So these are something which are, what are these? Operating activities. Operating activities. So what are operating activities? Operating activities are those activities which come into the day-to-day business activities. So whenever you balance the accounts which are involved in the operating activities, their balance is known as P and L. Okay, their balance is not known as balance CF, it is known as P and L. So whenever you're balancing L, you rent, you're not going to write balance carried forward. This is wrong. Why? Because rent is your operating activity. So here what are you going to write? Here you are going to write 2P and L, and then you are going to write 200, right? So I hope you know how to balance them now. There's nothing to discuss about that, right? Sale receivables, you're going to have a balance carried forward. So this is a 5,000 and this is also a 5,000. So this is going to go there. So what is that? This is a balance brought forward for 5,000. Okay, and sales is again involved with what? With the operating activities. So the balancing is to be done to the P&L account. 6500 6500. So to P&L, this is not balance CF, this is P and L. Why? Because it is involved in the day-to-day activity, right? Moving on, we have payables. Is payables involved in the day-to-day business activity? No. So we are just not going to do anything like that with payables. We are just going to write balance CF, and we have 200, and then you diagonally bring it down here, which is balance brought forward, which is 200. Moving on, delivery van. So what do you think the delivery van will have? Delivery van is also a asset, fixed asset. So this also has nothing to do with the operating business because it is fixed asset, right? So it's gonna have a balance carried forward here. So you're gonna balance it, you can, and then you bring it down here. You can do it by yourself. And then we have purchases. Purchases also has what? P and L account. Why? Because it is in the operating activity. Here you can do the balancing, and that's it. Then you have a share capital. So share capital also has a balance CF. Why? Because it is capital, right? It is a share capital. So you balance it down here and then bring it down here as balance brought forward. So now you come to cash. Cash also has a balance CF. So now you understand only the actually operating things will come into the will have P and L instead of balance CF. Why? Because those are the activities which are actually involved in the day-to-day operations, like purchases and sales and rent of the factory. We pay rent because that factory is only giving us the production unit, right? So that's why. So that's it. We are done with this chapter. I hope you understood this chapter. And in the following chapters, maybe you will be able to understand this one better because these are just basics. Even if you're confused right now, it will be clear in the later chapters. So I've linked everything in the description box below. Make sure that you check them. Thank you.